Happy Friday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. Let's jump in. And we begin in Europe. Germany's industrial malaise deepened in August, with total production plunging 4.3% from the previous month, the steepest decline since early 2022, as car manufacturing collapsed by 18.5%. The data released by the National Statistics Office on Wednesday painfully shows the scale of the challenge facing Chancellor Friedrich Merz as he met the heads of Germany's automakers on yesterday in Berlin, to discuss the sector's worsening downturn. Excluding temporary disruptions during the global financial crisis and the COVID-19 pandemic, industrial production has now fallen to its weakest level since 2005, and nearly 20% below its pre-pandemic peak. The car industry, long the backbone of Europe's largest economy, is faring even worse, with output outside crisis periods at its lowest point since 2000. Economists were shocked by the magnitude of the slump, far worse than the 1% decline predicted in a UK-based Reuters poll. ING's global head of macro said output was, quote, dropping like a stone, end quote, warning that, quote, the risk of Germany falling into a recession is very real, end quote. An analyst with Pantheon Macroeconomics called the figures, quote, ugly, end quote, though he noted that one-off factors, including the late timing of annual factory holidays and model changeovers, had contributed modestly. Still, structural headwinds are compounding the problem. BMW issued a profit warning on Tuesday of this week, citing weak sales in China and rising US tariffs. Bosch, meanwhile, plans to cut 13,000 jobs in its auto parts division. ING's global head added, quote, this remains the clearest illustration of the structural challenges facing German industry, end quote. Germany's economy has stagnated for more than 3 years, shrinking 0.3% in the second quarter as its export-dependent manufacturers reel from global trade tensions and competition from China's electric vehicle makers. Merz has pledged to revive growth through debt-funded public investments, but critics say reforms to tackle red tape and attract skilled workers have lagged. The president of Bundesbank said this week that the government had to, quote, speed up the pace to reform, end quote. The economy ministry on Wednesday slightly lifted its forecasts, expecting GDP growth of 0.2% this year and 1.3% in 2026. The economy minister said domestic demand should drive improvements from next year, but warned that, quote, a significant portion of growth in the coming years is likely to come from high government spending, end quote. Even so, she cautioned, quote, the stimulus will only have an effect if investments are implemented quickly, end quote. Next up, we move across the Atlantic to North America. US President Donald Trump and Canadian Prime Minister Mark Carney struck a cautiously optimistic tone on Tuesday of this week as they met in the Oval Office to discuss the strained $900 billion trading relationship between their two countries. While Trump said he believes the US and Canada can, quote, get there, end quote, on a new trade agreement, both sides offered few signs of concrete progress or compromise. Speaking alongside the Canadian Prime Minister, the US President described the US and Canada as being in a, quote, natural conflict, end quote, because, quote, he wants to make cars, we want to make cars, and we're in competition, end quote. Still, he noted that the nations had, quote, come a long way, end quote, in the negotiations and were, quote, working on formulas, end quote, to resolve disputes over tariffs on steel, aluminium, and autos. Carney, a former Bank of England governor who became Prime Minister earlier this year, emphasized shared interests, calling the US, quote, Canada's most important partner, end quote. He said Canadian investment in the US could reach $1 trillion within 5 years if a comprehensive deal is reached. Quote, there are more areas where we are stronger together, end quote, he said. Both leaders instructed negotiators to quickly land deals in key industrial sectors before moving to broader trade issues, according to the Canadian Trade Minister. However, he declined to set a timetable. Tensions remain high following Trump's decision to raise tariffs on Canadian goods that don't comply with the US-Mexico-Canada Agreement, USMCA, to 35% from 25%. Those measures have chilled investment and pushed Canada's economy into contraction in the second quarter. Carney's government responded by removing most retaliatory tariffs, maintaining countermeasures only on products facing US levies. Trump maintained a light tone during parts of the meeting, joking about Canada becoming a 51st state, but reaffirmed his hard line on dairy and industrial tariffs. He said any new agreement would be comprehensive, covering sensitive sectors long at the heart of US-Canada disputes. Beyond trade, the two leaders also discussed security cooperation, including the proposed so-called Golden Dome missile defense system, and coordination ahead of the 2026 USMCA review. Carney recently met the Mexican president to promote stronger North American supply chains in critical minerals and energy. And they will need to, as China has this week escalated its control over rare earths, putting the US and its allies in a very dangerous position. A development we'll cover in much more detail on my other channel, China Update, which will go live about 90 minutes after this episode. Meanwhile, back in Canada, fiscal challenges loom. The National Bank of Canada chief economist forecasts Ottawa's deficit could reach 100 billion Canadian dollars, $72 billion this year, more than double earlier projections, as Carney's government pursues major infrastructure and defence investments to boost productivity. He called Carney's upcoming 4th of November fiscal update, quote, the most consequential budget in a generation, end quote, adding that Canada still has, quote, fiscal room compared with other G7 nations, end quote. We will be following that development very closely when it happens. Despite the uncertainties, he and other business leaders expressed optimism. Quote, if you're going to reindustrialize and the US wants to reindustrialize, I can find no better partner than Canada, end quote. Canada will be hoping that America agrees. Now, we have one more development to cover, but just quickly, if you want to continue to be on top of the most up-to-date analysis on the biggest developments in the world's most important markets, consider subscribing to Market Update. Hit the bell notification icon and you will be. And if you're getting some value from today's episode, don't forget to the like button. There's also a Buy Me a Coffee link in the description below for anyone who wants to help keep the channel financially sustainable. I rely primarily on your support to keep going, and so this is also a tremendous help. Thank you so much. And finally for today, we move to Asia. India is embarking on a quiet financial revolution, drawing millions of low-income citizens into the stock market through tiny mutual fund investments. Families long accustomed to hoarding cash and gold are now being courted with plans to start as low as 250 rupees, $3 per month, a move that could unlock vast new pools of domestic capital for the nation's $880 billion mutual fund industry. Goldman Sachs estimates that such initiatives could channel as much as $9.5 trillion into financial assets over the next decade. Across the country, labourers, mechanics and small traders are taking their first steps into India's $5.2 trillion stock market, helping fuel a record 10-year rally in benchmark indices. The movement carries both potential and risk. For lower income groups, the appeal of fixed deposits or gold has always been their certainty. At their income levels, that assurance matters. Regulators are urging funds to design products with capital protection and to curb mis-selling in a market where awareness of risk remains thin. Even so, the government sees the effort as key to democratizing finance. Securities regulator SEBI has launched initiatives to expand mutual fund penetration beyond India's top 30 cities, where ownership remains below 20% of total assets. For many, these small investments represent hope. Analysts estimate that a 250 rupee monthly investment in a balanced fund could grow to $66,744 over a decade, roughly double what a bank deposit would yield. Meanwhile, while we were on India, at the macro level, yesterday, Indian Prime Minister Modi and US President Donald Trump spoke by phone to review progress on a long-pending trade deal, signaling continued engagement despite recent tensions. Modi congratulated Trump for brokering a Gaza ceasefire that secured the release of all hostages, according to a post on X. Bilateral relations have been tested since Washington imposed 50% tariffs on Indian imports and sharply raised H-1B visa fees, with the former measure seen as retaliation for New Delhi's purchases of Russian crude oil. Still, both leaders reaffirmed their commitment to strengthening economic ties. Quote, "We agreed to stay in close touch over the coming weeks," end quote, Modi said, hinting that negotiations toward a landmark trade pact remain on track. Okay, that is today's and this week's final episode of Market Update. Thank you so much everybody for watching. Have a good Friday, have a restful weekend, and I hope to see you for a new week of updates on Monday.